They don't look like they missed it much.
So we'll go ahead and get started and let Lynn Helms give his update.
Thank you, Katie. We are talking about August production, and in most respects, we set new records almost everywhere. So I'd have to say almost everything is in the positive. There were a few exceptions to that. I'll hit those first. First of all, rig count was down just one, or it was down from August to September by one, and it's down again one more today, and that's all about oil price. Oil prices have just been a real struggle the last 1 or 2 months. If oil prices were $5 higher, I think we would see some really robust activity, but they're not, and so that's the one segment of the whole report that is not a positive. We set a new record in oil production, just a shade under 1.5 million a day. We're at 1.477. That's about a 2.2% increase month over month, and a new record in gas production, a 2.3% increase. We topped 3 billion cubic feet a day for the first time. North Dakota has never before produced over 3 billion cubic feet of natural gas a day, and that's a massive number. I know it sometimes kind of gets lost on people how big a billion is, but that is an enormous number, and so I think that's a really important record. On top of that, we saw the number of wells waiting on completion decrease, so activity was pretty robust there. I think that was reflected in some of the news reports about Halliburton and hydraulic fracturing activity, that jobs were impacted throughout the Rockies, but the very least amount in North Dakota out of any of the states. And so there were a few jobs in Dickinson lost to that, but no layoffs in Williston, which is where their big frac fleet is located. We also saw workover rig activity up, and so we saw the number of inactive wells drop. That's a great sign. That's been a big concern, and as you heard, that's one of our big concerns with the rule changes that are going through the comment period right now. By the way, that comment period ends at 5 o'clock Friday, so if you have comments on the Industrial Commission oil and gas rule changes, you have only a day and a half to get those in. We saw increased activity on Fort Berthold, up 1 in the rig count. Oil production up, gas production up, active wells up on both fee and trust lands, and that was the kind of the one exception was there was an increase in wells waiting on completion on Fort Berthold, and I think we can attribute that to gas capture. So even the gas capture numbers got better. I do have to admit, and Katie, what did we report for Bakken capture percentage? I think we forgot to change that. Can you look at the official one? Mm-hmm. Okay, I could too, but you've got 2 hands over there. It should be 81%. I think it might have come out in the report as 76%, which is a couple of months old. It should be 81%. And so in every area, gas capture improved. We set a new record in terms of the amount of gas that was captured at 2.436 BCF a day. So we're starting to see those massive infrastructure investments make a difference. Still lagging way behind on Fort Berthold. Off reservation, statewide Bakken is 81%, off reservation 83%, but on the reservation in the mid 70s, 75 to 76%. So again, going back to wells waiting on completion, that's why the number increased on Fort Berthold, was that the gas capture infrastructure isn't there, and so people have been delaying completions and postponing production, and made an estimate of the amount of self-restriction, the vast majority of that being on Fort Berthold in August, about 33,000 barrels a day. So had we had the infrastructure in place to capture all the gas and to produce as much oil as the wells were capable of, we would have been over 1.5 million barrels a day. But we don't. And so we are not. In virtually every respect then, we got a positive report. Oil production up, gas production up, gas capture up, activity on Fort Berthold up. The only area where we're really struggling is oil prices. On the national front, a couple of things taking place. One is that we're nearing the comment deadline on the EPA methane rule revisions. And so I'm not sure yet if the Industrial Commission is going to be submitting comments, but that's under discussion. And then second, we're approaching the end of the response to comment period on the PHMSA petition over the Washington legislation. So the deadline for getting response to comments in is next Wednesday, October 23rd at the end of the day. And I know that North Dakota is, in fact, preparing response to comments. There were, if I understand it, several thousand comments submitted to PHMSA. Only 8 of them really substantive. Most of them were the form letter, postcard type comments, do this or do that. And but North Dakota is going to be responding to those substantive comments. Most of those, I think with the exception of the state of Washington, were in favor of the PHMSA preemption. So we'll see how that all shakes out. PHMSA has up to 6 months, 180 days after the comment period closes to issue a decision. So that deadline comes up April 20th of next year. So we'll just see how that all plays out over the winter. See, there's one more thing I wanted to touch on before we start taking questions, and that is on next week's agenda at the Industrial Commission on Tuesday. The Commission is going to be looking at a pretty significant policy change, or at least going to hearing with a pretty significant policy change in terms of gas gathering. And so watch for that. We'll be discussing that. It's on the agenda as of now, and that'll be taken up by the Commission Tuesday afternoon to talk about whether this recommended policy change should go out for hearing.
Wonderful. Any questions?
Yeah. All right.
With the, oh, I'm sorry.
Yeah, go ahead.
With the cuts from the Halberts and Rockies division, you mentioned some jobs were cut in Dickinson. Do you know how many?
I don't. The question was, do I know how many jobs were cut in Dickinson? And I don't. I know that it was lower double digits, but I really don't have an accurate number for you. It was not very many. That was kind of a branch office for Halliburton. Their main station in North Dakota is and has always been Williston, and they didn't make any cuts there. So it was just a little bit of a cost-cutting measure to reduce. I think it was 1 frac crew, but I don't have hard numbers.
Sure. Thank you.
You had mentioned that oil prices are, a bit of a struggle the last few months. Can you just talk about what some of the factors are that are influencing oil prices right now?
Sure. So the question was, what are the factors that are causing oil prices to be so uncertain? And the primary factor has to do with world economic growth. Europe has slipped into neutral, maybe even into recession in terms of the economy of Europe. That is largely due to this whole Brexit kerfuffle and what's happening and going to happen in Europe. And then also on the negative side, Chinese manufacturing is way down. And a significant factor there is the tariff dispute and the trade dispute with the United States. Most all of the reports that you see in here show significant slowdown in manufacturing in China, and that results in less energy use. The way that impacts the oil industry dominantly is less transportation fuel being used. So those would be the two negative factors. On the upside, of course, all of the problems in the Middle East tend to hold oil prices up, as do the Iranian sanctions. And so on any given day, the bulls or the bears run. And so oil prices have just not been able to break out of that sort of stagnant lower 50s number. It's not a great number. If you look at today's numbers, North Dakota revenues are based on a slightly higher number. So if today's numbers would put us a little bit below revenue forecast, fortunately, production is a good 10% above revenue forecast. So state revenues are fine because we saw production growth, but prices are a real struggle. So we've got a couple of significant downside factors and a couple of significant, really hard to measure upside factors.
On that same note, can you talk a little bit about any expecting record highs or with crude production and gas just through the end of the year, if there's any anticipation that will continue to go upwards?
Yeah, so our expectation is that we will set additional records before the end of the year. I do expect September to be a struggle. And, October could be a little bit, although the weather has straightened itself out, but we had some days in September when the significant rainfall had all of McKenzie County roads shut down and a good bit of Williams and Mountrail County, which are our core Bakken producing counties. And so there were 50 to 75,000 barrels a day shut in for several days in September. And then, of course, the snowstorm that we had here in October pretty much avoided the oil patch. There was little to no impact in the oil patch. So September numbers could be flat or down a little bit, but we should see robust numbers in October and maybe going into November. So I think we'll set some more records before the end of the year. And we're certainly going to set records in terms of gas processing and gas capture, because we've got some major gas gathering infrastructure coming online before the end of the year, and then some additional stuff coming on in the first quarter of 2020.
Forgive me.
Okay.
Forgive me if I may not know this, but you talked about some rules coming out of the IC next week.
Yes.
Can you give us a quick thumbnail on what they are?
Yes. So the question was the rules coming out of the Industrial Commission. They've been published and put on our website. We held hearings, was it last week? Monday and Tuesday. We traveled around the state, and not a lot of input on the rules, but the new paradigm seems to be everybody waits till the deadline so that other people don't see their comments. So we're expecting a lot of written comments to come in today and tomorrow. The deadline for those comments, like I said, is 5 o'clock tomorrow. So there were a large number of rule changes, 98, I think, in total. But substantial rule changes in that package are probably less than 6. And most of those center around dealing with inactive and abandoned wells. The reports nationwide coming in, especially from other states, is that with the lower oil prices, there have been a significant number of bankruptcies and a lot of wells going into abandoned status. And many states have thousands of wells. We've got, I believe, 639 that are in abandoned status. The majority of those rule changes deal with making sure that those wells have to be put on a single well plugging and reclamation bond, that they can no longer be part of the blanket bond package. And so I think 4 out of the 6 significant rule changes deal with that.
Are those rule changes, are those different than what the Industrial Commission is going to be talking about next Tuesday when it comes to use of policy changes related to gas gathering?
Yeah, so the question is, are the rule changes different than the policy change next week? Absolutely, yeah. So the one next week is something brand new. It is a subject that's hasn't been talked about since 1988. So I don't know. It might be older than some of you, which is not me and Dave though. No. Okay. So North Dakota has a piece of sort of archaic statute or law regarding natural gas gathering and policy there. And it just came to our attention within the last month or so that this could be inhibiting investment in gas gathering infrastructure. And so a couple of other states, namely Oklahoma and Texas, have dealt with this. It's a piece of law that virtually every oil and gas producing state has in their statutes because it was part of the model Interstate Oil and Gas Compact Commission statutes that almost everyone out of the 31 states adopted. And it hasn't been really a topic of interest since 1988 in North Dakota, but it has come to our attention that it's a positive change that we could make, that the Industrial Commission perhaps should make, and it could have potential to get bigger infrastructure built faster. So kind of exciting. Yeah, but it's completely new. It's not the same as the rule changes that we put out there back in, was it August?
Yeah.
Yeah.
Well, I can ask, what sort of change would it be making?
Beg pardon?
Like, what sort of change would it be making? What would it do?
Oh, okay. So the question is, what would it do? And it's going to get a little wonky here for you. I apologize for that. But the paradigm in North Dakota and in most gas gathering states is that all gas gathering capacity is called interruptible. There is no guarantee from day to day that your gas has a home in a pipeline or a plant or a compressor station. And so the potential change would be to make it clear to industry that something called purchasing firm capacity in North Dakota is legal. And of course, you know, the Industrial Commission can't just make that change without getting public input and you know, going through the proper processes. But the thought or the concept on the part of producers and operators is that being able to buy that kind of capacity would give them the guaranteed gas gathering volumes to plan. It could, in fact, speed things up by a year or two in terms of building big enough infrastructure fast enough, or knowing that next year I've bought X amount of capacity and I can drill Y amount of wells and put them on production. So it would be a significant change. It'd be like the difference between an adjustable rate mortgage and a fixed rate mortgage in terms of planning your financial future and your business. How's that for wonky? Yeah. Okay.
Did you say that was a law that was passed?
I beg pardon?
Was that a law that was passed?
There is a statute that has been in place, I think, since 1953, that creates a lot of doubt and uncertainty in this area. And it's a statute that almost all the oil and gas producing states have. Texas and Oklahoma have dealt with it, and in the way that we're kind of talking about doing it. So yeah, it's an old law, and again, there were some cases back in 1988 that really caused it to generate more uncertainty.
Would this have to go to the legislature to be repealed?
If we were going to repeal the law or substantially change it, yes, and that might be an outcome. I can't really predict what will come to us in the hearing. That is not the way that Oklahoma and Texas dealt with it. They have the same law or the same statute, but they have put rules and policies in place through the Oklahoma Corporation Commission and the Texas Railroad Commission to eliminate the uncertainty. Yeah. So,
I have one question that
oh
came
boy,
through
yeah, okay.
online. So it's related to gas capture and gathering, but we've talked in the past about pipeline right-of-way and the difficulty to get pipeline right-of-way in. Is that improving on the reservation lands or through the BLM process, or is that timeline that it takes to get that right-of-way still lengthy?
So that's a bundle of questions, and the answer would be no, it's not really improving. So, but in particular, there were new valuation rules put in place by the Department of Interior that made it even more difficult. So the value of land for a right-of-way has to be assessed in a completely different process than it did a year ago. And that really sort of upended the apple cart and stopped all of the right-of-way processes that were underway, and they kind of had to restart. So I think, you know, the lag that you see here is dealing with that difficulty in getting right-of-way on trust lands. I will say this, of industry reports that the process through 3 affiliated tribes or MHA Nation has improved dramatically and has gotten much better. But on the federal side, it's gone the other direction. So the costs have gone up and the delays have not gotten better in terms of working out those rights of ways. And so that, unless something changes there, we're going to continue to see gas capture lag on the reservation lands because of that.
I've got one more question about gas capture. We had talked, I think this is back in July, about a couple of, this may be a just question about some of the temporary shutdowns of various processing facilities and pipelines. Has that situation, do we actually have any like new facilities come online like in the month of August?
Yep, I'll cover that. Yep.
Okay.
Oh, good, thanks. Yes. I will say that we saw a significant decrease in the force majeure volume from July to August. So, you know, July was about as bad as it ever gets in terms of force majeures. And those are, you know, like acts of God, where somebody plans for a 4-day turnaround and it turns into 14 because things just went wrong. And so we saw substantial improvement in terms of a lot less volumes being attributed or flaring volumes being attributed to force majeure. But we're still, you know, we're still working. We're working in the right direction. We're at 81%. We need to be at 88 plus. We think we're going to get there, but we also think that in terms of long-term planning and infrastructure investment, that the thing we're going to talk about on Tuesday, which we already talked about, but the thing we're going to talk about with my bosses on Tuesday could make a significant difference in terms of long-term planning for investment in North Dakota infrastructure. So.
I have a follow-up question just related to weather in September, October. Have you gotten any feedback from operators related to any of the remote weather stations? And it may be early, but any impact those may be having?
Yeah, so a little bit. I saw a presentation Monday morning. 10 of those stations have been deployed, and it had a positive impact in Williams County. It was able to take a much more granular look at Williams County, and they were able to see from the weather stations that a small part of the county you know, got less than half an inch of rain, and those roads were able to stay open. That was for the first major September weather event. The second one just took everybody out. But so industry is very positive about the results. We've already seen a little bit of positive results from it. And of course, the remaining 40 stations are intended to get deployed over the next few months. They should be in place by spring so that the frost laws can be looked at in a more granular way. That's kind of the next big concern that industry has. And of course, frost laws have been put in place on like a county by county basis. And so this will allow the counties to be broken up into maybe a dozen or so zones, and frost laws can come off in a much more granular way. So that should really help us in the spring, but we're not going to get much help till then. And ultimately, the Industrial Commission also on Tuesday is going to be looking at a supplement to the weather station program. They need and want to hire a meteorologist. So you can collect all this weather data, but what county road superintendent is capable of interpreting that? And so the idea is to have available a meteorologist who can be called by the county road superintendent and say, what does this mean? Because he or she are looking at the weather station data, but without somebody that understands meteorology, it's a lot of math. It's a lot of numbers.
So we can have a North Dakota Weather Authority.
Wouldn't that be awesome? We should. We sort of do. We've got this group in Fargo, the NDON group, and of course, Governor Burgum really loves this project. He thinks we're only shy of the number of weather stations by a factor of is it about 1,000?
Oh, yes.
Yeah.
1%.
1,500. So yeah, there's going to be 50 of them deployed, and he thinks there ought to be one on every square mile in North Dakota, which would be ideal in terms of crop insurance and all the things that are impacted by rain and soil moisture and frost and all of that. That would be awesome. Mm-hmm. So yeah, so we've already seen some positive results, pretty limited, but hoping that they're all deployed and ready to go in time to get the frost laws to come off in a great granular way. Thank you.
Well, good afternoon, everyone. Justin Kringstad, Director of the North Dakota Pipeline Authority. I've got a few new materials that we'll cover at the end. We're going to start off with the typical topics of conversation. First, taking a look at production around the region, the other states participating in the Williston Basin. Eastern Montana, their May to June numbers were down pretty noticeably. They've been on somewhat of a decline and holding steady for the last several years. There is currently one drilling rig active in Eastern Montana, and one as well in South Dakota that is up from a month ago. But again, we'll keep an eye on that 47,000 for Eastern Montana. They do trickle in their production numbers, so I wouldn't be surprised if we see that prop up a little bit. But South Dakota as well, holding steady. So overall, the region, well over 1.5 million barrels per day. That is in the Williston Basin on the U.S. side of the border. That is being handled by the network of pipelines and rail systems. Just covering on slide 3, just looking at the month-over-month growth changes. Very, very consistent. Crude oil and natural gas the last 3 months throughout the summer. Very consistent growth on a volume basis, percentage basis, whatever metric you prefer to look at it. But again, that is in line with expectations where we were thinking from a planning perspective on that growth month over month. And as Lynn alluded to, the anticipation is that we're going to continue to see that grow at least in bulk throughout the rest of the year. September is a little bit of a wild card with the weather, but overall that trend is still continuing to grow. Slide 4, for crude oil movements out of the region. We did see some shifting, and I'll touch on here in a minute, between the rail and pipeline dynamics. We did see more barrels trending to get onto the pipeline network. Again, if we look at the blue line at the top, that is again the pipeline market share, and then purple is the rail market share. And the one big shift is in that blue dotted line, which is that Brent WTI spread, and that's something I talk about quite often. That being one of the early indicators of what marketers may be doing with those barrels of oil. In August, that dropped below $5 per barrel, that Brent WTI spread. Again, in my mind, I typically use $5 to $6 as that threshold of when a barrel may move on pipe or rail. And so with it being sub $5, it's not surprising at all that we saw the pipeline networks take on additional barrels, and we saw some of those barrels pull off of the rail network. And so overall on slide 6, even though we did see a production increase in August for North Dakota, we did see rail volumes continue a little bit of a downward trend. Again, that is market driven. We've seen again in August that incentive, that spread incentive weaken. As we sit today, I'll touch on it here in a moment, we're back up to around that $6 range. So it's right on the cusp of, if it was $8 or $9, it'd be kind of an easy comment to make, but where I think barrels might be heading. But with it right on that cusp at $6, it's real difficult to say. And once the numbers come in, we'll have 20/20 hindsight looking back. Where the barrels are headed when they are leaving by rail car, again, some shifting going on. We're seeing the West Coast, PADD 5, continue to be the dominant destination. Washington State is the only state I'm aware of that continues to receive North Dakota crude oil in that PADD 5 region. And then as well, PADD 1, which is the East Coast. There's questions I know Amy has been asking about what happened in Philadelphia when in June, late June, there was a refinery fire of the PES refinery that went down and then declared bankruptcy in July. And there were reports in the past that that was one of the destinations for Bakken crude by rail. And so with that refinery now out of service, again, it's not surprising when we see those PADD 1 deliveries on a downward trend, at least through the July-August timeframe. Then slide 8, just looking at what was happening in July. This is the latest data available from a pricing perspective. Again, looking at the East and West coasts, those still have the highest priced markets for crude oil, followed up by the Gulf. And so again, from that marketing perspective, it gets down to that challenge of, again, what modes of transportation are available to the marketers out of North Dakota, what are the destinations paying, and then again, finding space on those different modes and marketing those barrels out of the region. So nothing is causing me to say there'll be any major shifts. Again, we may still see the rail volumes subdued a little bit with a little bit less of a market on the East Coast. But overall, I think the trends are going to stay very similar, at least in the near term. And then where they're at today, again, looking at the Brent or the world oil price and the domestic mid-continent WTI at $53. That $6 range, again, that's going to keep barrels moving in both directions. We're still going to see the pipelines being very active, as well as many of the different rail loading facilities. But I don't have any reason to believe at this time, at least for the near term, that we'll see any major shifts in where those rail volumes are going. We're going to continue to likely see the PADD 5 be the dominant destination in the near term for those barrels. And then a little bit closer to home, taking a look at the import exports, the movements north and south of the border with Canada. Just very small changes, July to August. Again, those imports, those do include rail volumes that are coming through from Canada. Canadian oil production does have a number of transportation limitations, and so they are relying heavily as well on crude by rail in order to continue to market those Alberta barrels down into the U.S. Shifting gears now to the natural gas, as Lynn mentioned, 19% flaring, 81% capture. The only piece of the gas capture puzzle that shifted was that orange piece. So we did see a decrease in flaring from wells that were connected to gathering systems. And so again, that has to go directly back to more uptime by the existing gas processing facilities, and that will certainly shrink down that orange piece accordingly. Slide 12, again, the part that's been sticky throughout the summer was that blue portion, that 5% of flaring from wells that were not connected to a pipeline system. That is, at least over the last several years, that is at a historical high level. We typically were in the 2-3% So having 5% of our gas being flared from wells that are not connected is certainly something that we're keeping an eye on. But the biggest piece that the industry is first addressing is making sure that everything they have connected is having a means to move to a processing facility and having adequate capacity at that facility to handle all the gas. On slide 13, again, some good news on the gas connection side. We did see more gas connections than new wells producing gas, so that is a positive for the gas gathering industry. Again, going forward, at least through the warmer period, hopefully we'll continue to see that trend in that direction. Gets a little bit more challenging as we get into winter time and getting connections out in the field, but at least for now, some good news in the month of August. Slide 14 is taking a look at our existing gas processing capacity and then the upcoming gas processing capacity. There was a question earlier about gas plants and what's scheduled to come online, what has recently come online. If you look at this graphic, right at the end of that peach colored block, which is the existing gas processing plant capacity, we see a big jump up, and that was the month of August. We had 2 facilities come online. The Arrow facility expanded from 30 million cubic feet per day up to 150 million cubic feet per day. The investment for that project was $195 million. We also had the LM4, the Hess Targa JV project, which was a new gas processing facility, 200 million cubic feet per day, roughly $150 million of investment. So just in that month of August alone, again, shifting the discussion what we had in June and July of gas plants that were out of service, we've actually now in August added 2 new facilities for a combined total of close to 320 million cubic feet of additional gas processing capacity in the month of August. Looking forward, there are still 7 additional processing facilities that we have on the radar for coming online. 2 more will come online this year or are scheduled to come online this year. That's the One Oak Demicks Lake 1 gas processing facility. That's a 200 million cubic foot per day unit. Investment on there roughly $405 million. And the second facility coming online later this year is the Kinder Morgan Roosevelt project, which would be an additional 150 million cubic feet per day, another $355 million. And so, again, just taking a peek at those 7 projects that are still in the queue to come online, they equate to about a billion cubic feet of new gas processing capacity and roughly $2 billion in investment just in those plants and associated gathering. The other infrastructure that will be coming online within the next several months would be the Elk Creek NGL pipeline system. And so that is going to be another major piece of this gas capture puzzle. It's post-processing, making sure those liquids that are being processed at the facility then have an adequate egress out of the region in order to keep the molecules flowing. And then the last thing I want to comment here on slide 16 is just a quick update on the Bridger expansion project. They did just make public a new website. You can see the link down in the bottom right corner, bridgerexpansion.com, and 2 new maps. The project itself that's impacting North Dakota has 2 new pipeline segments. The South Bend pipeline, which would originate at Johnson's Corner in North Dakota, 16-inch line, 150,000 barrels per day, 137 miles. They're targeting in service for that piece of the expansion project for mid-21. And then further south on the Wyoming side of the project is the Equality Pipeline. That's a 20-inch line, so it's a larger diameter, higher capacity, roughly 200,000 barrels per day. That's scheduled to go into service Q3 of 2020. And so an earlier time frame that would be delivering not only barrels in the future from North Dakota, but also production that's being produced in the Rockies and Wyoming, the oil and gas industry in that region. Those projects, or that project in general, will move oil down to Guernsey, Wyoming, at which point there are additional options. The one new project is the Liberty pipeline system, which would deliver that crude oil down to Guernsey, Wyoming, and then down to the Gulf Coast as well. So with that, I'd be glad to answer any questions on any of these topics.
I have one quick one. How many transload facilities are still available in North Dakota, do you know?
I do. So the question was how many of the rail loading facilities are still active? I'm assuming that's the question.
Yeah.
I do have that. I don't have it off the top of my head. It's far less. During the peak, 6-7 years ago, it was over 20 facilities that were loading crude oil. Now I want to say it's less than a dozen that are still active today. And I can get you that number as well. So.
Can you remind me where the Arrow and then that Nestarga facilities are?
So the question was where those two facilities are that came online in August. Both of those are in McKenzie County.
And then the others, are they basically around Henry County too?
Yeah, so the question was the additional 7. So we have 3 that'll be coming online in McKenzie County, 2 in Dunn and 2 in Williams County.
And then, and your answer might be to tell me to go to the EIA's website and look this up myself, which I can do, but do you know off the top of your head how much the oil transportation from North Dakota's pad 2, is that right?
Yep.
Okay, pad 2 to pad 5, how much that's changed, over the last month or the last couple of months? Do you have those figures in front of you? Because I imagine I can probably look them up.
I did. So so the question was about the deliveries from pad 2. You were wondering about pad 5 or pad 1? One would be the East Coast. Yeah. So pad 1 on the East Coast. Yep. I did calculate. I was anticipating this question. So,
Thank you.
Yep. So in May of 2019 was just over 160,000 barrels per day. June was roughly 133,000 barrels per day. And then in July was 93,452 barrels in July. So from that recent peak, it's not the peak. If we go further back, there was much higher volumes going to the East Coast. But just in the last 2 months, from May to June, that's down almost 67,000 barrels per day.
Okay. Yeah. And I mean, would we attribute that like entirely to that refinery or just partially to that refinery? Do you know if there's other factors influencing that?
So the one factor would obviously be the market side of unloading, but then also the price spread as well would be the secondary factor. And trying to delineate how much to attribute to each one of those factors would be real difficult to say, but both of those will be contributing to that decrease.
Okay. And then do you mind going back to the slide, was the truck rail slide up to Canada? Yeah, that one. Yep. And I probably asked you this like in years past, but I can't remember. Looking at the red line, when it was pretty low, it looks like June of 2017, and then it's just increased quite a bit. Obviously, there's been that one drop since. That looks like that'd be imports of North Dakota oil by truck and rail to Canada, right?
So that'd be imports coming down from Canada into the U.S.
Yep. Here.
Yep.
Oh, okay. Okay.
Yep.
Got it. Never mind then.
Yep. Okay. Well, thank you very much.
Thank you.
I just had one clarification.
Yeah.
From that. So